welcome on board Rajeev Mehrotra, the Chairman and Managing Director at RITES Limited, joining in on the show right now. Rajeev, hi, good morning. Good to have you on the show. What is it that you've made for the budget allocated for railways? Railway capex clearly continues to go up. Help us understand what it means for RITES.
Good morning. I think this is a very encouraging scenario for RITES. Railways capex going up by 34% is really much more than what we were expecting. This is going to open up a lot of opportunities for companies like us. In fact, from yesterday itself, we started getting assignments which would flow out of a budget. So I think not only the current year's, the coming year's budget is very encouraging, but the pipeline which has been opened up through National Infra Pipeline or the National Rail Plan actually gives a long-term certainty about the flow of investments in this sector. That is very positive for companies like RITES.
Okay, fair point. The fourth quarter generally is a strong quarter with major pickup expected. Are you envisaging or anticipating the same, a pickup in the fourth quarter?
In fact, we are expecting to do whatever we can do as year-end targets in Q4. There are still disruptions coming in the supply line for exports. Our almost 1,400 crores export orders are under manufacturing, but we are finding that the supply chain for components is still not really normalized. So we were expecting to start shipments by January, but this will now happen February onwards. So this should get reflected in the Q4 performance with positivity.
Okay, let's now dissect the third quarter. Wanted to understand what your order book is. Q3 execution clearly seemed weak. Can it really pick up in the fourth quarter then?
Q3 is actually weaker than what we were expecting because a lot of projects which came at the end of last year, the land acquisition was delayed. So the real engineering work or the construction work on certain projects could not start. So that has impacted the consulting part. The quality assurance revenue was also down. There were delayed orders placing or urgency for supply. So this has slightly impacted. This is a temporary phenomena. The company is sitting on a very strong order book of 6,500 odd crores. And the exports are in the pipeline. So even if there is a spillover of exports by a month or so, I mean, the supply line is fully tied up. So I think the order book itself is very comfortable for looking up double-digit growth in 21-22.
Sure. Rajeev, a lot of capex has been impacted, of course, due to COVID. Do you see faster execution now in FY22?
Oh yeah, execution has started picking up, but the problems, a lot of places land could not be acquired, the process could not be completed, the supplies could not happen, the steel prices slightly disrupted at some places. So I think now Q4 we see a lot of normalcy compared to Q3 returning to the construction sites. Okay. It's still not normal actually. It's still not fully normal.
Sure. Some of the brokerage is talking about some disappointment on zero deliveries from exports. How do you see things evolving there? How will you address this?
The export orders are actually getting ready. We are planning to start first shipment on 25th February. This will be shipment to Sri Lanka. And then the Mozambique orders are also ready. Let me clarify this because Mozambique order is first time India is exporting on a Cape gauge market. So there were a lot of sub-assemblies required to be procured afresh or which were not in the supply lines. So there were some disruptions because of this, but it has been put in place. So Mozambique supplies also will start February onwards. Yes, we were targeting to do in actually Q3, but then this spilled over to Q4 because there were a lot of disruptions in the pockets which are manufacturing these sub-assemblies, whether it is Tamil Nadu, Maharashtra or North India. So that has been controlled now. So there's no reason to unduly worry. There could be spillovers of 2-3 weeks here and there, but we will shortly share in this month itself the shipment news with the market.
Okay. Also, if you could, really help us understand, what was your segmental breakup like? What was consultancy as a segment, how that performed? And what was the performance for turnkey? And going forward, even beyond Q4, how is it that you see the breakup and the pie of the segmental performance shaping up?
Okay, let me start with the biggest differentiator in the 9-month scenario, which is before you. Last year, we had in 9 months, first 9 months of last year, 483 crore rupees exports, which have not happened in this year, which are actually lined up in Q4 only. So if you keep this in mind and then compare, the impact on the numbers is 14-15% over last year only. Now coming to the segments, the consultancy has picked up. Consultancy, we reported 244 crore rupees revenue, which is down by about 14% over last year's number. But as I said, despite our efforts, the construction sites have not picked up that well, as also the quality assurance orders from the customers. So that is now getting better day by day. We are back to normal in our leasing business. Whatever leasing impact was there in the lockdown period, all those locos have been taken by steel companies, port and power companies. So that's almost back to normal. We are seeing normalcy returning to our power management business, because power management consumption was affected by COVID train operations. So all those operations are returning. Exports I have talked about. And I think the Q1 should start seeing a very, very positive movement going forward, because of the order book, because of the shipments, which have spilled over to Q4 or maybe a few weeks here and there. Because even the marine lines are not that readily available. So even if the production is ready, say by February end or March, maybe the shipments could be still 1 or 2 weeks here and there. But looking at order book, the pipeline of the projects in hand, I am optimistic that FY21-22 will try to make up. FY21 is a bad year. We have tried to minimize the impact in whatever way we could, but we will end this year with a lot of positivity coming from the budget for railway sector, highway sector, airports, and not only within India, the countries where we are working, we are also working on a couple of other export or service assignments, new businesses.
Okay, great to have you on the show. Thank you so much for taking the time out, Mr. Mehrotra, and giving us highlights on how the third quarter performance was and how fourth quarter is likely to shape up.